Once, the mountain of Hollywood dreams stood tall. Paramount Pictures, home to cinematic legends and golden-era storytelling. From The Godfather to Top Gun, Maverick Paramount shaped movie history. But in 2025, this Hollywood titan faces one of its greatest challenges: surviving the streaming wars. Can Paramount reinvent itself in an era ruled by Netflix, Disney, and Amazon? Or is this the beginning of the end for one of the oldest studios in America? Let's break it all down. The origins of an empire. Paramount's story begins over a century ago, in 1912, when the Famous Players Film Company was founded. In 1916, it merged with Jesse L. Lasky Feature Play Company, forming Paramount Pictures, Hollywood's first true major studio. Through the 20th century, Paramount became a cultural powerhouse. It brought us timeless classics like Sunset Boulevard, Indiana Jones, and Mission Impossible. Its studio lot in Los Angeles became synonymous with American cinema. But fast forward to the 21st century, and the entertainment landscape changed forever. Streaming disrupted everything. Traditional media giants had to evolve or disappear. The shift to Paramount Global in 2019, Viacom and CBS re-merged, creating Viacom-CBS, later renamed Paramount Global in 2022. This merger united film, television, and digital content under one roof. Paramount Global now owns a massive portfolio: Paramount Pictures, Films, CBS, Broadcast Network, MTV, Nickelodeon, BET, Comedy Central, and its streaming platforms, Paramount Plus and Pluto TV. The company aimed to compete head-to-head with Netflix, Disney Plus, and Warner Bros. Discovery, offering both premium and free streaming services. It was a bold bet: go digital or fade into irrelevance. The streaming struggle. By 2025, Paramount Plus has grown to over 85 million global subscribers, a major jump from just 56 million 2 years ago. Its free service, Pluto TV, is also a hidden gem, boasting over 80 million monthly active users across 35 countries. But growth comes at a cost. Paramount's streaming division has yet to achieve sustained profitability. Billions have been spent on original content, international expansion, and licensing deals. While competitors like Netflix and Disney are finally turning profits in streaming, Paramount is still catching up, struggling to balance subscriber growth with profitability. Its latest quarterly report showed streaming losses of around $400 million, though that's down significantly from the year before, a sign that cost-cutting efforts are working. Financial snapshot and market reality. So where does Paramount stand financially in 2025? Revenue for the year is projected around $30 billion, with total debt exceeding $15 billion. A heavy load for a company under pressure. Its market capitalization has fallen sharply from its pandemic highs, hovering around $8 to $10 billion, compared to over $25 billion just a few years ago. Paramount's stock, Para, has been volatile. Once trading near $100 in 2021 after the Archegos Capital saga, it's now closer to the $10.15 range, reflecting investor uncertainty. Analysts remain divided. Bulls argue that Paramount's content library and streaming pivot could fuel long-term recovery. Bears believe the company may need to sell assets or merge to survive. In fact, in mid-2025, rumors swirled of potential buyouts, with Warner Bros. Discovery, Skydance Media, and even private equity groups eyeing a possible deal. The legacy and the future. Despite its financial struggles, Paramount still owns some of the most iconic brands in entertainment. Franchises like Top Gun, Transformers, and SpongeBob SquarePants continue to generate billions in box office and merchandise revenue. And there's hope. Paramount's strategic focus now includes scaling Paramount Plus profitability by 2026, expanding international distribution deals, leveraging AI-driven content optimization to cut production costs, and partnering with tech companies for global streaming infrastructure. In short, Paramount isn't dead. It's fighting for survival through reinvention. Investment outlook: buy, hold, or avoid. For investors, Paramount is a high-risk, high-reward play. It trades at a very low valuation, a PE ratio under 10, making it look cheap on paper. But the uncertainty around streaming profitability and debt concerns make it a speculative bet. If Paramount successfully turns its streaming division profitable, the upside could be enormous. But if subscriber growth slows, or if a takeover fails, the company could face another round of restructuring. In short, value investors may see Paramount as a deep discount opportunity, Growth investors, however, might prefer Netflix, Disney, or Amazon. Players with stronger balance sheets. Final thoughts. Paramount is more than just a studio. It's a symbol of Hollywood's past and a reflection of its uncertain future. From The Godfather to Top Gun, Maverick, it has entertained generations. But now, it must adapt to a world where screens are smaller, audiences are fragmented, and data rules the business. Can Paramount climb the mountain once more? Or will it become another victim of the digital age? Only time will tell. Thanks for watching Next Vault. If you enjoyed this breakdown, don't forget to like, subscribe, and hit the bell icon for more deep dives into the world of finance, business, and investing. See you in the next one.